Hello, good morning, good afternoon, good evening. This is your boy, Mr. Jurassic Forex on the line. Today, I just want to introduce you to my simple trading strategy called the top-down analysis. For you to understand the top-down analysis, it is very, very easy. That is just the trade from the word top-down analysis, meaning that there is a need for you to start analyzing the market from the higher time frame, then you scale down to the lower time frame to get your entry point. Okay, like this is what volatility 200. Okay, it doesn't matter whether it's a volatility or you're a currency trader or you're a synthetic trader, commodity trader, stock trader, or even futures. What matters is the understanding and the application of this strategy to all the market around the world in order for you to be profitable. From the word top-down analysis, there's a need for you to start your analysis from the top and then start scaling down gradually. To some people, there's what they call time frame in forex, which is very, very important. The time frame, meaning that there are different time frame that a trader or traders makes use of when it comes to the analysis of the market. Okay, we have the 1 minute time frame down to the monthly time frame. That means that the 1 minute time frame for each 1 minute, there's a candle that is produced. The same thing applicable to the 5 minutes time frame. The same thing applicable to the 10 minute or 15 minutes time frame, going down to 1 hour. That then means as you are going higher, the numbers of candles are practically reducing. Okay, they are practically reducing. That then means that once you get to 1 hour time frame, that then means for every 1 hour there's one candle that will be formed. For every 4 hour, one candle will be formed. For every day, for every day one candle will be formed. For every week, one candle will be formed. As you are gradually going up, okay, you discover that the numbers of candle that is being formed, it is reducing gradually. So that then means that it tells you a history or a story about the financial market. That then means that obviously you should know that the higher guys are the boss in the market. The higher time frame are actually the boss in the market, because wherever the higher time frame tells the lower time frame, that is what they are going to do. It's just like you working in an organization. For instance, you discover that there is a need for you to obey the rules and regulation of a certain organization that you are working in order to work with them efficiently. Failure to do that, you will be sacked, or you'll be forced to resign. Okay, the same thing applicable to forex. Whenever you fail to understand or to look at what the higher time frame are doing, that means that you will be flogged. What did I say? You will be flogged. And then the flogging that we are talking about here is not physical flogging, rather financial flogging, which at the end of the day you will pay for it dearly. And that is not why you are here. We are all here to make profit as a trader. So what do I mean? There are several kinds of time frame. Okay, you now discover this MN, meaning that monthly time frame, this W1, meaning that weekly time frame, daily, meaning that daily time frame. Let's start from the daily time frame. Okay, depending, like me as a trader, I make use of the D1. I look at the weekly and then sometimes the monthly, but basically I look at what the weekly is saying and what the daily is saying, and then scale down to 4 hours, even 1 hour, to know how to attack the market. From here, you basically see that from the daily, this candle they are seeing that form and selling pressure. This green one, this very green one, that form selling pressure, understanding the market. This candle closes, this candle itself closes by 1 a.m. Nigeria time. Okay, it closes 1 a.m. Nigeria time, and you discover that immediately when the candle closes, what happened to the candle? You have to when the candle closes, you need to look at the candle and understand what the market is saying. The candle actually closes. What kind of candle? Is it telling you that it's a reversal candle? Is it a continuation candle? At what point is the candle actually forming? Is it at support level? Is it at resistance level? All those things are crucial when it comes to the financial market. If you look at this very well, you will discover that when you try to put your support and resistance line, okay, this thing tells you about what the market actually is closing at a point where the market was once rejected from. Okay, looking at this point, you discover that the market got to this place at the point rejected, and then it got to this place again and got what rejected, and then gave you what a selling pressure at what resistant area. That means that the candle at the end of the day gives you what a selling pressure at what resistant area by 1 a.m. And that 1 a.m. shows that what throughout that day, at the end of the day, it gives you what a selling pressure, telling you that what the candle should go down, or rather the market should go down from the what pin bar, which is what inverted pin bar now, which is called what the selling pressure. And then sometimes you cannot just say this and just start saying that the market is going to go down. One, you need to consider what the point at which the candle is formed. Is it what at support level? Is it what at what resistance level, to know how to what attack the market? Of course, obviously, this is formed at what a resistant level. How do I know that it's formed at resistant level? The price got to this level here. Price got here, got rejected, and then it tried it again to break through, but the candle could not close above this level. The candle could not close above this level, okay, and forms a rejection. That tells you that at that point the buyers were able to penetrate through that resistant area but could not stay there for long, and then they was pushed back by what the sellers, which resulted to what the formation of that what pin bar, which is what inverted pin bar. Some people might call it Greystone Doji, some people might call it selling pressure, but I'm telling you that is what a selling pressure, which tells you that what it is, what a kind of a candle that tells you that the market should what reverse at that point. One, it closes with what it closes with a selling pressure. That is number one. Secondly, you at what point is it closing? Okay, it is closing at what a resistant area. Okay, a resistant area, and gives you a what a selling pressure. And then you now discover that the combination of this candle, this candle, and this one that's coming around gives you what an evening star. Okay, let's move down to what the lower time frame, which is what the 4 hour time frame. Okay, the 4 hour time frame, you discover that it gives us a lot of what selling pressure at this point. The buyers were able to go up but were rejected by what the sellers. They tried severally and they were rejected. Here, okay, the buyer got to this level and they were rejected by what the seller gave us another what selling pressure, and then the market started going down. Okay, when you check the lower time frame, like what the 1 hour time frame, you discover that the market actually formed what they call M formation, which is what a reversal pattern. Okay, look at this. It's very easy. M formation. This is what first shoulder of the M and the second what shoulder of the M, which gives you what it tells you at this point that the market should go down. Okay, one, you discover that on the daily there was what a formation. Let me show you guys. On the daily there was a formation of what of the candle closes with a selling pressure at resistant area, and then when you check 4 hours, you discover that the same selling pressure was given severally by what the sellers at what 4 hour time frame. Okay, this is, I can't even count them. This is like 1 2 3 4 several selling pressure, telling you that what at this point the strength of the buyer is gradually reducing, and then the market, the seller wants to take over the market at this point. Then you now went down to what the lower time frame, like what the 1 hour, you discovered that what formation of what a pattern, okay, formation of a pattern, which is what an M formation, which signifies what a that the market wants to go down at this point. You should not be told that the market wants to go down, because what the higher time frame is saying is what correlating with what the lower time frame is saying, and that is just a simple reason why this market is actually going down here. Okay, even though you go down to what the 30 minutes will still give you what an information, okay, which tells you that at this point, the market wants to what? Go down. The good thing is that, please, whenever the market gives you, there's always a need for you to get, see, there is another selling pressure at this point, okay? Because it is possible that the market will form an information, but if it did not give you a reversal, candlestick, please, it is not advisable for you to enter. Okay, this is M from here now. Okay, like from here now, you discover that this is an M chart pattern, which is an M formation, and then this can now give us what a rejection to tell us that what we have seen on the higher time frame is beginning to what happened on the lower time frame, and it tells us that what we should go short on this market. Okay, understanding this this top-down analysis will make you to be very profitable in the market. Just a quick recap of what we talked about. We started from what the daily time frame. This candle actually closes by 1 a.m. today, Nigeria time. Okay. When it closes, what does it tell you? Look at it that, okay, what kind of candle does it close it? Does the day close with? Okay, it will give you an idea where the market should go. Okay, it closes with what? A selling pressure. Okay, at what area? Okay, some people call it area of value. At what area is it? Support area? Is it at resistant area? In this case, it is what? A resistant area. Okay, it is a resistant area because price once rejected from that area, and then price got to that area again and got rejected. So that means it rejected at what? Resistant area. Okay, and then the next thing that you need to know, you go down to the lower time frame, which is the H4, to know what the market is doing. Looking at what the market is doing gave us a lot of what rejection, selling pressure, telling us that at this point that what the market, the buyers are what being exhausted, and then the possibility of market reversal is there because of what the kind of candle formation that we are seeing. And then you move down to the lower time frame, which is the H1, which is what the 1 hour. It gave us a pattern, which is what an information to actually tell us that what the lower time frame is in line with what the higher time frames are doing in order for you to enter your sell. Okay, understanding this price action strategy called top-down analysis will make you to always be profitable in the market from Mr. Jurassic. Okay, this cannot make you to be wrong in the market. I'm telling you that this understanding this properly cannot make you to be wrong in the market. This is Mr. Jurassic trying to tell you that one of the best strategies so far that I've seen trading the financial market is a top-down analysis, starting from the higher time frame and then scale down to the lower time frame in order for you to get your entry. Okay, this is your boy, Mr. Jurassic Forest. You wait for the next lecture from Mr. Jurassic. Remain blessed. God bless you.